Hi, I'm Clifford Bennett, Herston Economics. It's midweek and so far things are going very well. There's been a couple of developments over the last 24 hours. US retail sales, 0.3%. People going, oh no, it's a disappointing number. Retail sales grew by 0.8% through December, January, averaging 0.4% a month. That's up 0.8% when the world was expecting the US to have a recession by now, by the way. But retail sales grew by 0.8% in the midst of all that really bad weather. I mean, we've got to cast our minds back to how bad the weather was. People were still out spending more than they did for, previously. So I think that's a really good number. Also overall, the Fed's, New York Fed's Empire State Index for manufacturing moved higher again, still looks really good. So the outlook for the US economy is just fine. Wouldn't get too fussed about the retail sales number. The Dow was down, but it was down like 0.3%, and the price action was, after an initial sell-off, was pretty supportive during the day. Oil, we're almost down into that 84, 83 area where we said you should buy some and put it away in the garage for your children and grandchildren. Almost there. Gold's higher again. Gold's mid-range at the moment, sort of 1360 to 1390. Might hesitate a little bit here, but the dominant risk remains to the upside. Sterling's been very strong, one of our favorites we keep talking about. It looks good as well. But a couple of really funny things today. Great results from BHP, but the price being lower as everyone seeks to take profits. I think you let the short-term traders take profit on their BHP trades, probably mostly CFD traders, perhaps such as yourself, taking profit on the news, but I'd certainly buy this dip once that initial selling profit-taking phase is over, because BHP is going to do very well. They're investing another $80 billion over the next 5 years, and that's going to see their profits continue to soar, as is the case for all the other major miners, particularly the iron ore miners. It amazes me that some people talk about iron ore prices going to correct or have a dip. They can only go higher. I mean, does anyone think demand's going to get less? The other really funny thing happening today is a lot of the banks and brokers are talking about sell the Aussie because China had high inflation, they'll hike rates, slow their economy. What a load of nonsense. If your broker or banker is telling you that today, you need a new broker, okay? Because nothing China can do is going to slow the increased demand for our commodities. That's the major reason, the major force driving the Aussie higher. It's going to continue to go higher. Still very bullish Aussie, looking for 103 short term, have been for a while, looking 108 by year end, 112 next year. So buy any dip in BHP or the Aussie today for the same reason, China. Have a great day.